All right, back to the markets, please. We've still got this dichotomy. The Dow's gain of 369 points is accounted for entirely by just 5 Dow stocks, which are up sharply. Nasdaq's down 126. Daniel Newman joining us to cover the markets today. Now, you're saying, Daniel, as you've said for a long time, Nvidia is the cornerstone of AI. Does the company's profit justify its lofty evaluation? Because, as you know, Michael Burry, the guy who made $1 billion shorting stocks in the '08 financial crisis, he thinks they're overvalued.
Well, first of all, being successful shorting housing in 2008 does not make you an expert in AI. I'm not saying he's not doing the research and the diligence. Clearly, he is willing to look at that line-level data. That's the whole story behind it. But if you look at Nvidia, you look at the $500 billion of orders it has visibility into the next year. We talked, I think, one time before about the net income, the profit that they create, over 50% of that revenue. And we believe they can do $300 billion next year, generating $150 billion in income next year.
Wait a minute. 300 billion revenue.
Yep.
And 150 billion of that is pure profit.
We believe that at the margins they currently operate at is achievable. And their growth trajectory doesn't really show signs of slowing down. Microsoft had one of its lead architects come out and talk about just in the last week that before 2029, 2030, they don't see a single indicator that the demand could slow and that the supply could be met. So we are building so much over these next handful of years that I just feel like there's this bearish theme that people want to be true, and you can wish it, but you can't make it true just by wishing it. The AI boom is very real, and we're seeing it in every corner of the AI supply chain.
I just find it very difficult. I don't have a strong enough stomach to put money into Nvidia at a lofty evaluation like that.
Well, I mean, you do have to
give me all the numbers.
Well, I mean, you look at Massa's decision to exit. He made 1,000% over 5 years, and now he's deciding to reinvest it into OpenAI. But now you got a company like OpenAI that could get $1 trillion IPO or evaluation that won't make any money for the next 5 years. So you do have the, hey, I like a company that makes $150 billion, that has huge customer demand, that has the best customers in the world, the Googles, the Microsofts, the Amazons, all buying from them. Or you can go into a startup, obviously much more upside, but significant downside risk as well.
Okay, Palantir had a wonderful run, came down, back on a run up now. Where's it going?
Rule of 114. You've heard of the rule of 40. That is companies that are growing very well in the software space. This company did a rule of 114. This is one where growth and valuation come to an intersection with the bulls and the bears. The bulls say, look, it's growing at a rule of 114. It's the fastest growing software company. It is the proving point of enterprise AI, along with maybe a ServiceNow, IBM, but it's the biggest indicator of enterprise AI success. There's a really bullish theme there, but the bears look at it and go, hey, this thing's trading at 250 times plus forward earnings. We think there's a short. I just would never get in front of that bus if I was an investor when you have that kind of retail momentum and you have a company growing at that pace.
Well, you've been right so far, and I hope you're going to be right again. Daniel Newman, you're all right. Thanks very much indeed.